Moving average. Hello, this time we're going to deal with a moving average trend indicator. Moving averages are one of the most simple and common trend indicators. MA indicator has gained popularity owing to its simplicity and explicitness. Despite its plainness and austerity, many experts consider moving averages one of the most effective trend indicators for all the time technical analysis has been employed. Moving average is a smooth line based, as proceeds from its name, on average values of the price fixed within a certain time period. Thus, moving average allows focusing mainly on a direction and dynamics of the price movement rather than on market noise and occasional fluctuations which appear on the chart quite frequently. For calculating average values, any parameters will do: a closing opening price, its highs and lows, average between them, and so on. Practically, however, the most widespread way of plotting these lines is the one based on the average of closing prices, since it is a closing price of the bar that is of primary importance. A moving average value can be calculated by several methods. Simple moving average. A value of the moving average is an arithmetic mean of price values for a certain period of time. Weighted moving average. For plotting a moving average for this type, each price for every time frame is weighted. That means each price value is multiplied by a certain coefficient. The more the distance between the price and the edge of the graph is, the less the coefficient is by which it is multiplied. In other words, the extreme prices, which are the most important at the given moment, are taken into account for calculating the values of weighted moving average rather than less recent prices. Exponential moving average. It has much in common with weighted moving average. The difference is that all the price values of the preceding time frame are taken into consideration, not only those specified in the parameters of the average at its plotting. It is possible, owing to employing a preceding value of the average, to calculate its new value. That is, each value of exponential moving average to some extent depends on the preceding ones, which can be rather away from the edge of the graph. Three methods of drawing moving average mentioned above are surely the most common and widely used among many others. Simple moving average is what usually meant by moving average term. Yet there are abbreviations used to distinguish between the three types: simple moving average SMA, weighted moving average WMA, and exponential moving average EMA. Let us plot several averages of a given time frame on the chart to compare them. InstaTrader platform supports most technical indicators and oscillators. Besides, there are no restrictions regarding the number of moving average types employed. Adding a moving average to your trading terminal is easy. Follow this path: View, Navigator, then open the full list of indicators, select Moving Average, and either drag it to the chart or give it a double left click. Once you have done it, a pop-up box with the indicator's parameters will appear. You can leave them unchanged or adjust them by yourself. Use Reset button to cancel your corrections and have the standard settings back. Choosing a time frame of the moving average. To shift the average onwards for several positions, enter a positive value. On the contrary, a negative value will push it backwards. Leave Shift slot with a 0 value. Deciding on a method of plotting the moving average. We shall not alter simple MA method. Then, in Apply To slot, we shall enter values which will form the basis for our moving average. On InstaTrader platform, there are several price types to choose from for plotting average. Let us take a standard variant, closing price. At last, select a color and style of the first moving average. Once you click OK button, a simple moving average will appear on the chart. Repeat the above-mentioned steps to add to the chart a weighted and an exponential moving averages. Apparently, simple moving average is more conventional over others. It needs more time to react to price movements. It is quite smooth. As to weighted and exponential averages, these are more prompt to mirror the price trend. Traditionally, simple moving averages are applied for large time frames, while exponential ones for shorter periods. However, there are no set rules about which type of averages to employ, so you can choose any. Moving averages are widely used in trading due to their ability to filter market noise off and indicate a direction of a trend. If average is going up with price values being over the indicator's line, then the trend is moving upwards. On the other hand, in case of a declining average and price values being below the line, the trend is downward. Furthermore, it should be noted that an average of a properly set time frame serves as a reliable support line on a rising market trend and a resistance line on a declining one. Practically, a combination of two or more moving averages of different time frames is used for revealing entry-exit points. An average of a large period, a slow one, reflects the main trend, while that of a less period, a fast one, demonstrates local market tendencies. A fast-moving average crossing a slow one signals a possible trend change and suggests opening a position for an emerging trend. A slow average crossed from below upwards is a signal to buy. A slow average crossed from top downwards is a signal to sell. Rationally set parameters of moving averages can yield excellent results, providing you with a trade alongside with a trend. Still, a trader should keep in mind that under the conditions of a flat market, crossed moving averages can be misinterpreted.